Welcome to today's video where I'm going to go over why I believe Ethereum has bottomed for the short term and where my next trade will be from here. Make sure to like and subscribe if you enjoyed the video and leave a comment if you have any questions. Let's get into it. Okay, beginning here with Ethereum, if you remember from my last video, what I'm really interested here is this symmetrical triangle that we broke down from and made over a 50% drop in the last few days. Now, when we come over to the 4-hour time frame, just to look at the daily, but have it a little bit more in depth, we can see that we've had this symmetrical triangle here and we had a massive breakdown. Coming down to this breakdown here, we've had a 3-push wedge, which is very common. 1, 2, 3. Very good trading strategy. One of my absolute favorites, and I teach it in my 7-hour trading course. Make sure to check that out in the description box below. Now, what I'm really interested here is this 1, 2, 3. It already signals to me that the market is going to be looking for at least a 1, 2 push up. So we're going to get a 1, come back down, and we're going to get a second push to the upside. That's what I'm expecting. Now, if you see here, if you know a head and shoulders pattern where you have the shoulder, you have the head, and then you have a shoulder pattern. Now, can you guys see something similar in here? I very much can. It's actually called an inverse head and shoulders, where you have the shoulder, you have the head, and then you have the shoulder forming in here. That's what I'm currently really interested in, and that's the current price action that I'm waiting for to happen. And I may believe it has actually happened already, because it doesn't have to come down to this wick here, because that's where price traded extremely quickly. Where I'm more interested is where the actual bars close. And since the bars closed in this region up here, if you come across, it is very much the same region. So what I'm expecting is a head and shoulders move to the upside. Now, if you want to wait for the highest probability, and the trade that I'm going to actually wait for is you can get in early in here. You can begin to start to enter. But the problem is here is that price, this might not be the end. It might keep going down, might keep going down, might keep going down, and we might end up here. You just never know, because we could have a slanted head and shoulders where it's slightly slanted diagonally. Now, what I'm expecting here is to do this head and shoulders move, but I can't predict the exact price point it's going to turn around, and I don't need to. What I'm actually waiting for here is a clear break of this high. Once we get a clear break of this high, that signals to me that the probability of this trade is much higher, and I can actually begin to enter with a higher trading volume. If I was to enter in here, I would just start with a very small trading volume, because I'm actually high risk, but also high reward. So I don't need to risk a lot to win a lot in that situation. But when the price is more up here, I'm further away from where I was. So I have still a good probability, but I'm not going to make as much because we're closer now to my target. But I'd much prefer those trades because we're much higher probability. Rather than taking a 50-50% trade, I take trades that are closer to 70-30% because I can force my probability higher, and regardless of the size that I'm trading, I adjust it so I'm risking 1 to 3% of my overall portfolio, and that has just been the best risk to reward strategy for me. So what I'm expecting here is this head and shoulders. Once we get a clear break of this high, that signals to me I can begin entering, and enter with size, not entering $5, $10, $20,000 position, but entering $100,000, $1 million positions once we break this high. Reason being, coming back to the daily, is knowing that this symmetrical triangle is here, we actually retest the symmetrical triangle apex extremely high percentage of time. Price is always going to come back and retest this apex. We could drop down to $600, but guaranteed that in the future, we are going to retest the apex, because that is how trading works. It is how technical analysis works. It is how the bots are made to trade this market. Now, we're going to be looking for the exit point in this apex point. Let me actually show you on the 30-minute why I love this strategy and why I even saw it the other day. You can see here, we have another apex of the triangle. You scroll in here on the 30-minute, I was ready for this trade. You can just see when what's happening is price is coiling. You can actually see price is going bigger, smaller, 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 smaller. And right in here, you can see price barely move. And that's the signal when price is coiling, 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 coiling. When it gets right to this endpoint, and again, in that last third of the triangle, bang, that's when we see the price absolutely explode, because we're actually coiling, coiling, coiling. And it's like a spring. You get a really high powered spring and you hold it to its full capacity, and then as soon as you let go, it goes bang, and it absolutely explodes. And that's what's happening here. But you do see that what did we do? We came back and we retested this apex. Very, very common to come and retest this apex. Now that's the exact same trade I'm expecting here. What we're going to do is we're going to make a push up, we'll make this head and shoulders move here, and as soon as we break this high, that's when I'm going to begin entering with size and actually look for my exit point at the apex of this triangle. This is the apex right here, and it's the last third. That's where I'm interested in actually exiting my trade. So if we were to enter in this point up here and take a trade, that is a 48% trade. Absolutely mind-blowing. You don't need to put you don't need any leverage. You don't need to even put much size. You're going to be making 50% potential on your trading account. That's absolute. People are making 5-10% a year, and they're absolutely ecstatic with that. Making 50% on a trade, and I expect this to happen, beginning to start now, and maybe take 2 weeks, to get all the way up to 50%. It's not just going to happen in 1 day or 2 days. It's going to take a couple of days to slowly move in that direction. And that's where I'm interested in taking this trade. I'd rather take a swing trade when then I can focus on other businesses. I can focus on building my trading course. I'm currently making a cryptocurrency course. I can focus on all these other things with social media while I'm just holding a really, really, really profitable trade. So I'm not trying to force a trade here at any point. I'm just trying to look for where is profitable. Now, coming over to the 30-minute time frame, I just wanted to show you, this was the last couple of days right before I made my last video. Right here, you can actually see that we're beginning to make a wedge. Can you see this wedge pattern? Wedge pattern here, we're seeing to make a wedge. Now, if you've got my trading course and you've been following my videos for a while, you'll know that an upwards wedge actually has a 75% chance to break down, and a downwards wedge actually has a 75% chance to break to the upside. So here we could see that we had not only a wedge, but we had that 3-push wedge again. We had 1 push, 2 push, 3 push. We've got that wedge pattern, and you can even see we're actually coiling. You can see in the wedge, we're coiling, where we were bigger, and now we're getting smaller and smaller and smaller and smaller right before, and then we just begin to explode. So we've got that 3-push wedge, and then what did we do? We made a perfect bearish channel. Look how perfect this was. It was literally hitting the top, bouncing off the bottom, hitting the top, bouncing off the bottom, hitting the top, bouncing off the bottom. So we're making a clear descending channel here, and now we're beginning to have some bullish premise in here. You can see that the bull bars all through here, you could see that there weren't that many big bull bars. It was big bull bar, small bear, big bear bar, small bull bar, small bull bar, small bull bar, big bear bar, big bear bar, big bear bar. Whereas in here, you can start to see bull bar, bear bar, bull bar, bear bar, bull bar, bear bar, bear. You can already just tell just by going through and seeing the more green and more red. You can already see in here it was more bullish, and then it started more red, more red. Here, you can already see that the bull bars are starting to get bigger and bigger, which means there's larger orders being placed in the market at that price. Now, it doesn't mean that that's going to be the exact bottom, but bots don't use 100% of their buying power. They'll use 5% of their buying power, and they'll continuously ladder down and down and down until the price just continues to explode upwards, and then they're profitable on 80% of their trades. When you exit out at 80% of their trades, small 20% of them aren't in profit, the rest of them are in profit, and that's just long-term profit potential. You just can't give up that type of strategy. That's just the way to do it. It isn't to go all in, 50 times leverage, put all your money in and expect you to just win. That's just trading like a casino, and at the end of the day, you're never going to win because you'll never actually be able to trade thousands of times, because before you get to your 50th trade, you'll just be liquidated and you probably just give up because you're just over it. You need to give yourself the best probability, the best chance of winning, and it is risking 1 to 3% of your account total and actually giving yourself the best chance to win long-term in this game. It's not an impossible game, but why people fail a lot of the time is they over-leverage, they put 10, 20, 30 times leverage, and then they just get liquidated overnight because a 3% move takes you. You need to risk 1 to 3% of your total account, and then in the long term, you'll actually be able to take thousands of trades because you'll never be able to blow up in one night. So this is a point where I'm beginning to think that we could go bullish. But again, as I said, I'd rather break this high because it increases the probability, and then I can really enter with size. I don't have to just be entering small positions because I'm actually risking a lot. My initial risk right here, if I'm going to take a trade, my initial risk has to be all the way to the low. I have to take that risk because that's how my trading works. Now, if I'm going to take that risk, I can take a 16.6% risk, but then I'm going to have to be taking about 20% of my normal position size to be able to account for that 1 to 3% total loss of my account. Now, if you don't understand, leave a comment. I can explain this to you exactly on why my risk to reward probability works really well, but I will just quickly explain it again. That if I have to risk 16%, because that is my current trade, if I clicked buy right now, I'd have to risk 16%. So the only way to risk 16% and risk 1 to 3% of my account is just to turn my account size all the way down. And that's not what I want to do right now. I'd rather wait for a high probability trade where then once we break this high, my new low will be in here and my risk to reward might have to only risk 4%. All of a sudden I can 4 times my account and still only risk 1 to 3% of my account. So very interesting times. I'm actually really interested in a long. The day's only really just started and the daily bar is only just beginning and it is a small green bar. If you've enjoyed this video, make sure to like and subscribe and I'll see you in the next one.